This is our blog video for January 25th, 2013. We released a new version today using the new synthetic currency indexes. We have for the last probably 6-7 years had statistical tools that compared every currency to every other one. Now we also have tools that allow you to see the actual index of just the euro, just the dollar, and so forth. So let's start with a star EUR. Bring up a chart. Now, forget what it shows there now. You want to right click on the chart, go to chart settings, add script, and go down to FX currency indexes. And for the most part, if it's an intraday bar, I show a 15-minute index moving average, a 60-minute index moving average, previous day's high and low. Not many options, and they're pretty self-explanatory. I would use the default options we have on there. Once you do that, it's going to calculate the index, and you can see it's plotting a chart. This is actually a euro index. Now you can then add some of our statistical tools like our FX trend intensity and pivot score daily, weekly, monthly to see the statistical daily, weekly, and monthly strength, weakness. Daily, weekly, monthly. So what now you have is a chart of the euro that also shows the previous day's high, previous day's low in red, hourly moving average in red, and the 15-minute moving average in white. So you can see today the market opened up near yesterday's maximum high. As you can see, the dotted green line broke out at 205, and from basically then on out was trending up until right here. The beautiful thing about having an index, instead of just our FX trend intensity based tools, is you can actually see double tops, or if the index makes a higher high, you can also draw trend lines on there. When the trend lines are broken, typically, oftentimes you get big moves in the opposite direction. So most people trade either the euro or the pound against the dollar or the euro, or the yen. So we'll put the pound on here or duplicate that. To bring this up on any of the 8 pairs, dollar, yen, euro, pound, Australian, New Zealand, CAD, and Swiss, just put a star in front of the symbol name. So this one here, I'm going to put star JPY, and I'm going to move these around a little bit. As you can see, the yen was weak. It's going down. I'm just trying to move these over so we can see the 4 main pairs that people trade, or 4 main individual currencies that people trade. I'll put star USD on this one. And then let's scroll back for the main part of the day that most people trade, 3 till about 11 or 12. So I'll show a little bit before 1 on all of these charts. So basically, in a nutshell, how we've always used our statistical tools is we want to buy the strongest ones versus the weak and sell the weakest ones versus the strong. There's no doubt that the yen, of all 4, the yen's the weakest. The daily trend, weekly trend, monthly trend's all down. It is also right near the previous day's low of this index and breaks down to make new lows. The pound starts the day off in the middle. The euro's up near the high and breaks out. So it's clear that the euro is the strongest of all of them. And at times, maybe the pound is the second strongest. And once the dollar, this is a perfect example, by the way, of a double bottom, comes down and hits a low, rallies up, comes down, hits a low again, and pretty much, rallies up for the next couple hours. Not very strongly, but its trend clearly on the chart is up. So basically, in a nutshell, the euro is the strongest, the yen's the weakest. It doesn't take a rocket scientist to say buy the euro yen. So we bring up a euro yen chart, and especially notice the times when this became really, really strong. Right here, it broke above the previous day's high. That's a very bullish signal right here at 1:50 a.m. Eastern Time. So we'll go look at the euro yen. Now, if you just saw this chart at 150, yes, this one's also going higher, but it's probably not necessarily the most bullish pattern you've ever seen. It did break above, actually a little bit later. This was yesterday's high. And you can see at 150, the euro broke out, but this one had not yet went above that previous swing high. So a lot of the other euro pairs are making new highs, whereas the euro yen hasn't. So you might have actually been watching and waiting for this 120, 125 area to get in, whereas our new index value lets you get in here a little bit closer to 18, 7 pips early. Or at least it alerts you to watch this chart, and when it breaks out in this chart, it's going along, and you have this nice trade here. Now notice from 2 to 9, this pretty much trended up. And you can see from 2 pretty much till about 8:30, the yen just kept going down. So basically, and looking at the euro, you can see, up, sideways. You could have been watching this euro and getting into a trade when it breaks out right here at 345. 345 is very likely a high probability time to also be buying this. So here's 345. It broke out again. You have the confirmation from the euro index. And again, this went from 120, 150 up to 121, almost 25. It's almost a 75 pip move. And that's the benefit of this. And it's clear you're not fighting which currencies is a trade. And, there's a lot of other ways to use this. The pound is inside of yesterday's range. It wasn't able to break out above the high. When you see that, and this happens frequently from my trading with this, when it breaks down underneath the lows right here, you can get short right at 430. Now, what was a strong one to be buying against? Obviously the euro. You want to buy the euro pound around 430. Now, more than likely, this has been going up even before that. But notice what happened here at 430. It shot up from 85.05 all the way to 36. That's a big move for the euro pound. Also notice the pound came down and hit pretty much yesterday's low, wasn't able to go underneath it, rallied back up here to the hourly and 15-minute moving average, and then broke out to the upside right here. So towards the beginning of 705 makes sense to be buying the pound. And what's the weakest one? Most likely the yen. Pound yen at 705 is a good one to be buying. Watch this. Here's 705. Now this one has not actually gone above the day's high. But you're in that trade anyway a little bit early, and you always want to draw your fibs off the last swing. And usually the first or second fib target is your profit target. If you're in this trade and the pound on the index keeps going up, 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 and the yen is either going down or sideways, you stick with it. And most typically you're going to get out. You're going to catch a lot more 1.618 fib targets, whereas before I think a lot of traders, including myself, would exit half the trade at the first fib target and trail the second half. Now, with all these tools that I have, I'm going to stick with it until the 1.618 fib target, and in this case, make another 17 pips on the trade, because I know that the pound is going up. And also, when you see a currency that's strong and you get a pullback like this, you can kind of draw your trend lines over the pullback, and when it starts to go back up, get in. You don't know where it's going to end up at, but at 905 it makes sense also to be buying the pound yen. Let's bring this chart back. This is how I've traded with this and found unbelievable timing. So here's the 905. This one actually pulled back and started to go up a little bit before, but using that index there, waiting for the other pound pairs to join the pound yen. It's possible that the pound yen starts to go up before all the other pound pairs do. That's fine. You might have to, in some cases, get into a trade 5-6 pips later, but think of how many losses you're likely to avoid by making sure that all the pound pairs are moving when you're in the trade. I would prefer that personally, and I found great success with this. And if you want to get into a trade once it breaks a trend line, just watch the pound pair. And let's scroll over here and watch this one here. All right, so it would have been somewhere around right here. It didn't quite break back above yesterday's high or this trend line I drew over the bar's high. This next bar just barely is at the previous day's high. So if you had jumped the gun on that trade a little bit early, this is obviously looking to go in your favor. All right, you can see, you stick with it. You might move your stop to break even there. It's still above yesterday's high, so that's positive. All right, it's taken off. All right, so you might have got out of this trade when it broke down underneath this bar's low here, the 955 bar, maybe. So that's right around here. You can also use a trailing stop on this chart as well. So let's look at the euro, which was obviously the strongest one. You can see it went sideways here and broke out. You also have a nice pullback. It found support at the 15-minute moving average of the index. 6 o'clock right here is a good place to go long. 6 o'clock on the yen. Notice this thing's been going sideways. It was just inching its way up at that time. The euro yen at 6 o'clock is a great place to sell it. I'm sorry, to buy it. Strong euro yen. And you can see on here, you have that nice pullback on the chart too. And you can also use range charts. Let's go to a 5 pips per bar range chart. I look for 3 to 5 bar pullbacks, and it's a much higher probability at finding entries. So here, what we have on this chart is 1, 2, 3, 4, 5 bars. One green bar, you buy it when it goes a pip above there. So you might have actually got into this trade and it didn't initially work. Came down and stopped you out. You lost 7 pips. You get into it again, and it went from 72 all the way up to 15, right? So it's a 45 pip win. So how many of you would not mind losing 6 or 7 pips and then make 10, 15, 20, in this case 40 plus pips? You get your loss back, and then you can see here a 3 pip pullback, 1 green bar. You get in, it went up, kind of ran out of steam, came back down. You move your stop to break even. Maybe you lost 2 pips there. You see this little flag pattern on here. You buy the breakout again. You want to see right here at 602 is the euro yen, or the euro going up. Yes, this one's going up. Kind of ran into a little brick wall up here. Couldn't break the whole number, and then pulled back. And then it finally broke out again a little bit later, 705, 710. So let's scroll forward and look at this chart a little bit later at 710. Here's somewhere 710, somewhere around here. Yeah, right around there. You have kind of 3 bars down, 1 up, 2 down. This is a decent pullback method as well. And you can see it went from 122.20 all the way up to 65. It's a 45 pip move. And even if you got out of this with 10 or 20 pips, think about how much easier this is in trading. Now I'm only showing the 4 main pairs. We have this for the Swiss, we have it for the CAD, we have it for the Australian, and New Zealand. So with the yen being weak, let's take a look at the Australian. I'll put the New Zealand down here on the bottom. Both of these are weak. You don't want to trade a weak one. You can clearly see the Australian's weaker than the New Zealand because the Australian broke yesterday's low. So we know already that the euro was strong. Obviously buying the euro Australian also made sense. So if you go back and look at this chart, notice how easy that is. Up, sideways, up, pullback, buy, up, pullback, buy, up, pullback, buy, up. Basically it's that easy. Let's take a look at the CAD. CAD's also very weak. And notice the time. It breaks yesterday's low, right around 6, and then again at 7. So again, buying the euro against the CAD, also pretty much a no-brainer. 6 and 7. Here's 6, boom, 7, boom. This is a 100 pip move right here. So again, this is the best tool we have ever released in the last 9-10 years that we've been working on our software for our own trading. And most of these ideas come from my own trading. I want to make trading easier. I want to trade less time and make more money, just like most people do. Having a family and wanting to spend time with them, and also running a business, which one of the reasons why we've always given our software away for free is because we believe that we can train people to become full-time professional traders, and we only do well if our customers do well.